Ladies and gentlemen, welcome to another edition of In the Pit with Lobo Tiggre. My guest today, or my victim, is Fred Davidson. He's the CEO and president of Energold Drilling. Fred and I go back a long time. He also wears the hat at Impact Silver, which is an interesting silver play in Mexico. But what I really wanted to talk to Fred about today is Energold Drilling, because Energold, being a supplier, as it were, to the junior resource sector or the resource sector, can be seen as a proxy for the sector, and that makes his company particularly interesting. So Fred, why don't you tell us, the overview, how is Energold doing, what are you doing, and then I'll get into my questions, okay?
Yeah, that's not a problem. As you know, the market for mineral drilling, certainly since 2012, has been suffering. Part of it is the lack of interest in metals itself. Part of it is the fact there's been a diversity of product out there for the high-risk investor to take on, such as cyber, what have you. We're looking at things such as cryptocurrencies. Marijuana is the latest sort of thing. There's a variety of those things out there, and unfortunately, they're sort of an easier sell to the average investor. Mining's complex. I think it's a long-term type of investment in terms of people, and the end result is we're seeing a lot of the money that would normally go into the juniors just isn't there. I have juniors approaching me all the time asking me if I would half fund their program if I drilled it for them.
Drill for shares.
Yeah, exactly. That's the last thing I need. The ones we are seeing is the group that is active is more the mid-tier. Because of the metal prices, because of resources declining with the metal prices, they're out there looking. And so there's a real divergence, if you will, in the industry right now. The mid-tier guys are working. The little guys aren't. And the really big guys are sitting around worried about New York, thinking that their quarterlies are going to look too bad if they do exploration. So they're going to look at making acquisitions or mergers, which they're obviously doing recently. So it's an odd situation we're in right now. And unfortunately, from our perspective, our basic feed is the little guys. They're the ones going out doing the early stage exploration. It's the one where we have the highest expertise in. And it's the one where we specialize in, and it's punched us on the nose over the last 6 years.
Well, let me jump in on that for a moment, because you're not just a driller. You also have these man-portable rigs. It's something of a specialty niche market, and there are a lot of people, you would think, whether you're a junior or a mid-tier or a major, where you have like some of these really topographically challenged projects where it's hard to get in there with a track-mounted rig, or very environmentally sensitive where you need a minimal footprint, so the man-portable rig is a better solution. Why hasn't, or has that helped you hold up, or why hasn't that done better for you, given that you're not the only ones there, but you were among the first, and you have a lead position in that market?
Yeah, we're actually seeing that those are the rigs that we do have working. The bigger rigs aren't. Most of our competitors, and a lot of them are competent drillers, they don't go for the early stage exploration. They focus on drilling at a mine site. And that's always been, from our perspective, tough to push our way into, because we are competing with guys who know how to do it, who've got the big rigs, and it's competitive to deal against them. And the margins get really tight when you do those jobs as well, because there's 5 guys bidding every job. The earlier stage, as you say, is true. I mean, in many cases, we're the only tender. Our attitude is we'll go wherever you need us to go, and we'll drill whatever you need us to drill. The downside of that is a lot of those people are the juniors, and they're just not there at the moment. In fact, about 50% of our revenue right now is non-mineral drilling.
Okay. All right, so let's talk about that for a moment. I've got to ask, the last 4 years, according to Yahoo Finance, you see revenue, you see earnings. Why can't you cut overhead? And I understand that there's less drilling, but if you're doing less drilling, you're spending less on the drilling. why aren't you making money? Or what can you do to be profitable? Will you be this year? Or talk to us about your finances.
Yeah, good question. Very valid question, actually. As you've seen, the market and our revenue has fallen off consistently. We did about $140 million in revenue about 6 years ago. We hit the sort of bottom, if you will, in 2016 at around $65 million in revenue. G&As are tough to bring down because we're operating in a bunch of countries that require you to have a presence there, that requires you, for bureaucracy purposes, to file tax returns, regulatory reporting, what have you.
And if you left, like if you left Peru to cut your overhead, and then the contracts came back, you'd have to reestablish an office, start all over again. So
you got it.
Fixed costs. Okay.
And to a degree, we've been hanging on by our fingernails to say, look, we know this is a good market. We want to keep our presence there. And I've got to admit, I've been surprised at how long it's taken for the market to even start to recover. This is the longest I've ever seen. And I think a lot of other people have said the same thing. We are, in fact, cutting back. And in fact, we're probably down to about 15 or 16 countries we're working in now, as opposed to about 24 or 25 a few years back. On the same side, we have been able to, since 2016, start getting our revenue up. And there's two functions, as you pointed out. One, we got to keep our G&As down. And we're going through a second process even now, cutting where it bleeds, and it's going to affect some of the issues we do. It's going to mean the quality of reporting is going to go down a bit. Some of our controls are going to go down a bit. By reducing the number of countries we're working in, that helps as well. The other side, and we did make a news release on it, is we're in the process of selling one of the vehicles we have. It's called Dando, which is the rig manufacturer. That had a fairly high G&A coefficient because a lot of it was research and development. And of course, we're selling it now that we finally turned it to a profit. It's just,
the way of things.
It's one of those things. But that will certainly get the G&As out on that side. The other thing we're seeing is by increasing revenues, your G&As become a smaller percentage of overall revenue. Margins, though, are still tough. And on the mineral side, it's still very, very competitive. Some of our growth areas, like our non-mineral work, is actually growing quite substantially. And year over year, our growth has been around 15% a year for the last few years. We're going to do roughly around 85 million for 2018. And 2019, even without Dando, we expect we'll be doing probably the same number of dollars, but improved margin. With lower G&As. So we are pushing at it. It's not an easy animal to deal with. And the issue continually is what projects do you take on with limited cash availability? Because working capital is tough. Revenue increased $20 million. Unfortunately, in this business, your receivables extend out between 90 and 120 days between work in progress and receivables. So that means that literally $6 million effectively has gone just to finance that extra growth. And it means you get squeezed in sort of a cash crunch. The growth is good. This year, up till September at least, we had a positive EBITDA. First time in about 4 years. And we were forecasting for 2019 that if things continued, we'd be actually positive earnings. And it's going to be a function of how we use the available capital we've got to put the rigs in the field to maximize the dollars on the bottom line.
Understood. So last I checked, your financials for 2018 hadn't been published yet. Is there an ETA on those?
Yeah, we're basically, say we bounced a whole bunch of people, so we're now working with a crew that's about 2/3 the size it was before. So it's going to be pretty late getting it out. I think May is the forecast, or late April. And that's the number we're looking at. Normally we'd be about 4 weeks ahead of that, but I say we've downsized the G&As by probably 15% this year alone.
Okay. So, and I won't ask you for anything that's not public yet, that's not disclosed yet, but what I'm getting from you here is potential shareholders shouldn't expect a turn to profit necessarily for 2018, but if things continue as you spoke with the trending, particularly your non-mineral drilling, into 2019, there's a chance that 2019 may be the year that you get back into the black. Is that a fair arm-waving guess?
That's the target. It's only function that'll hold it up is working capital, effectively, to make sure we can put out the rigs we need to put out on a timely basis. And the good news is we're growing. The bad news is we're growing.
Yeah, I understand. And
the
cash crunch that creates.
That growth. But yeah, we're seeing it. There's certain markets have turned really well for us. Other ones are still soft. But as we currently forecast, it looks like this is the year that we're going to finally get back into the black. Yep.
Okay, so fair enough. Now, let's say, you know, the happy question, right? Let's say the resource sector really turns around this year. Let's say gold breaks above 1,400. Everybody's excited. You know, marijuana was yesterday and it's gold this year, and everybody comes rushing back. Can you respond to that? If you laid off all these people, are they waiting for jobs? Do they get other jobs? Do they get their own rig and go off on their own? You know, if the sector turns around, how capable would you be of catching that wind, that tailwind?
Well, it's probably all of the above are going to be problems. But we have, in many cases, like Mexico or in Peru and places like that, or in Africa, we've trained up locals, and their ability to go work somewhere else is far more constrained. So I think in this case, we can probably crew a good portion of our rigs that are not being utilized right now. We did over $100 million in mineral drilling alone in 2012. Add in our best for the oil and gas drilling was about $50 million. So if we manage to get 6 out of the 8 cylinders working, we could see a fairly dramatic increase in top line. And even if the margins don't increase substantially, that's going to blow the G&As right out of the water, and we should be looking at a good bottom line. The other one we've always had is amortization. And as you may recall, when we took over that oil and gas company, we had to do a write-up of the appraisal value. So we've been needing a fair amount of amortization over that. Those assets are now down at the point where they're only about $4 million in net book value, and I guarantee they appraise for a lot higher values than that. So, you know, we do have the underlying assets there. We just have to get the work coming in the door to fulfill it.
Sure. And sorry, one more hard question, but do you have the cash to make it through? Let's say things do turn around, look up towards the end of this year. Are you going to need to go back to the market to raise more money, or do you have the cash at the bank to see you through?
As you say, the financing is basically 1/3 of everything you earn, or gross revenue goes to financing that. And that's why I'm sort of qualifying the growth factor by the fact that we can only grow as much as we have working capital. I'd hate to go back to the market at the current prices, just may have to, because then getting to the profit, even though it's dilutive up front, creates value to all the shareholders down the road. I'm not really crazy about any more debt. We don't have a huge amount, but it's enough to be a pain in the butt. And, you know, ultimately, I'd like to clean that up. And, you know, we may even look at selling some of the non-performing divisions to generate that cash to do it.
Okay, fair enough. I appreciate the straight answer there. There's something you touched on earlier, which I really wanted to talk to you about, and that is, you know, you're a driller, or you're the CEO of drillers, and when things do turn around, you're going to be one of the first people pick up the phone and call. When it's one thing to talk about, oh yeah, we have all these wonderful plants, but when things really do turn around, in other words, when people get back to work, when all these juniors start saying, okay, now's the time, we're going to explore, you're going to be one of the first people they call to say, do you have rigs? You know, when would you have rigs? Have you heard any sign of that yet? Or, you know, if you're a leading indicator, you know, what can you tell us about the junior resource sector right now?
It's still pretty uncomfortable right at the moment. We've had 2 inquiries in the last day, which is pretty nice, but it's been sort of chirping out there as the crickets go. for some of the markets we're in. There's certain markets where there's social issues, not just money capability, where people can't drill, they can't raise money because the country in question is, not in favor. There's other ones where there's so many companies out there looking for just basic financing just to keep the lights on. It dilutes a lot of the money that would be available for exploration. And again, marijuana's done pretty well. There's biotech, there's high tech, there's AI, there's a whole bunch of things that weren't out there 10 years ago. And they are diluting the interest. And I think until people realize that, base metals now are at quite a high price. And gold, even though they talk about gold, gold is still a pretty high price. And if it takes off, there's not a lot of resources to be delivered against any of those. Copper's over $3. I mean, those are all in demand, and yet nobody seems to recognize it.
Yeah, it's quite interesting. When you and I first met, I think we were dreaming about one day gold might reach $1,000, and now people are crying into their beers that it's only 1,300.
Yeah, exactly. Yeah, would be nice to have silver a little higher, but
yeah. Okay. All right. Well, thank you very much. You've been a good sport. Candid answers, very appreciated. Good luck with it all.
Thanks a lot. Appreciate the time. Talk to you again.